So big news was in when SpaceX filed their S1. They announced that they were leasing their Colossus I data center, which analysts believe they built for somewhere between $3 to $4 billion. Now, I've seen some estimates as high as $7, but let's just go with a $4 billion number. So they built this in 122 days in Memphis, Tennessee. They are just announced in their S1 filing that they were leasing it to Anthropic for $15 billion a year for 3 years. So if you spend $4 billion building a data center and you make $45 billion in 3 years, and honestly, I think the lifespan of these data centers could be 20 years. So even in 3 years from now, I believe that the data center probably will have appreciated in value versus the construction price. But the compute demand is so high right now that the ROI on building a high-end compute data center is what Elon Musk just demonstrated is over 10x in 3 years. And that is incredible. It's one of the best ROIs we've ever seen in tech. You know, Microsoft and Google, Amazon, they have a historical return on capital invested of over 30%, which is amazing. But there's a reason why they are all investing $1 trillion together in building out these high-end compute data centers. It's because the ROI is so good. They could invest a lot at 30%, but they're investing $1 trillion combined because they believe that maybe the ROIs are upward trending to well over 200% a year. So what does this mean for investors, right? Investors should always think about the downside risk when they're investing. But I do wonder, one, if that's how much you're making on data centers, and people also say Elon Musk is building out a 2 gigawatt data center, so that's like 8x more compute than Colossus I. You know, could you rent that out for $400 billion a year? I mean, it sounds like the numbers are just huge. One, so it's hard to be bearish. And then for me at least. And then the second thing is the people building out these data centers that are nearing completion and they're about to lease them out. It seems to me from what we learned from this S1 is that the compute prices are way higher than anybody expected. And so what will be their profits when they start leasing these out? And I think that's a really good question. You've got Oracle, you've got companies, obviously you have Microsoft and Google, and Amazon, but you also have companies like CoreWeave, Nebius, Cipher, TeraWulf. All these companies operate that and are able to lease out high-end compute. And so I've been asking myself, which one of these are the best plays? And personally, I believe in Oracle the most. I always get nervous in the smaller companies because of high stock-based compensation, unprofitable. The revenues and the debt often look quite large, or the revenue looks quite small, and the debt sometimes looks quite large compared to what the stock is trading at. So those things usually make me nervous. I'm not the most speculative investor though. So maybe that's not for everybody, but Oracle has a great software business that's kind of underneath and funding some of this operation. They have great revenue growth already, over 20%. They have great earnings growth already. So what if they can push their profit margin from 10% to 50%? And I think that's a really important question to ask. Even at a 50% profit margin, they're making a lot less in profit margins than Microsoft or Nvidia. Maybe it'll trend even higher. I mean, what's this mean for the SpaceX IPO? People were saying originally when they read the S1, look at like XAI isn't making any money, and you're like, yeah, but they're going to be making a ton of money when they lease out Colossus I. I mean, the whole operation, the year-over-year revenue growth is going to jump like 300, 400%. And they haven't even leased out any part of Colossus II. So could they lease that out for $100 billion a year? And, or 400 billion over a multi-year period? And the answer is clearly yes. And if they do that, I'm sorry, it's not clearly yes, but it definitely has that potential. And Elon Musk, if I was reading his tweets today, it seems like he thinks compute prices are going to go even higher. So what does that mean for SpaceX? I mean, if they get $100 billion of revenue in a year, they only have a price to sales at $2 trillion market cap of 20, which is way less than Microsoft. And it seems like maybe they could achieve higher profit margins at this point, especially once you combine Starlink in, which I think is very scalable. So I think this IPO is going to be really exciting. I think if you were building these data centers, you wouldn't slow down your semiconductor demand. So I'm still really bullish on semiconductors like Micron in the memory space, Sandisk in the solid state drive space, AMD in the CPU space, Nvidia in the GPU space, because you need those things for the compute. I believe they're going to have a lot of pricing power, because who would stop ordering them at these returns on investment? Nobody, right? So they're going to be able to demand higher prices and increase their quantity sold. So it's going to be like a magic formula, I believe, in the future of higher prices and higher quantities, and that's going to be really good for shareholders. And lastly, like how should investors target the data centers, the data centers and potential huge jumps in leasing profits? So it's exciting times, you guys. Stay tuned. I'll do another update soon. And thank you for everybody, by the way, that subscribed and liked this channel. So like and subscribe. You know, this is my second video, but I'm really honored for everybody that's came and listened. You guys make it all worth it. So thank you so much for your time.